Good afternoon, traders and investors. Welcome to Friday, February 10th, the end of the week edition of pre-market prep, the closing print. We'll see where we end up today's session, end up week session. A little bit down on the week. Not a lot going on today. In fact, so very little. We're unchanged here at 40.91.75. Couldn't take out that pre-market low, so we didn't get the follow through to the 7-day low at 40.4850 that perhaps I was looking for. On the upside, we touched pre-market high 98 and a quarter. We got to 0150, got up there a couple times. A little bit of geopolitical tensions here with a in the green now here just by a little bit. So that's what we're looking at. In the S&P 500 index is what is gold 76 and 79.82. Gold dissing itself from 1900, down 470 at 1873.80. Silver clinging to the $22 handle. That's down 12.3 cents at 22.02. And Bitcoin futures, they're slowly backing off that 24K handle, down $235 at 21,775. So thanks for joining me here on this Friday as we're approached. Just wanted to look at our close, going back to the S&Ps here for the week, looking at the dailies. We closed last week. We ended last Friday session at 41.47.75. Doesn't look like we're going to get back up there today. The focus number for the week for me was the high close of the rebound. That was made on Thursday at 41.91.50. We bested that number on Tuesday. Didn't come close on, what day did we get up there? We got up close to that area. No, exactly on Tuesday when we went to 88 and a quarter, but struggling to get that close over 4,200 today. So, not a great week, not a horrible week, but we'll see what happens. We have that CPI number, of course, the all important CPI number that's coming out on Tuesday, and that will be the focus for next week's trading action. We will cover that for you on Tuesday, of course, be covering it live. And then on Wednesday, we're going to have Blue Putnam on, good old Blue, coming over from the Chicago Mercantile Exchange to give his take on the numbers here. So here we are, Friday, and let's take a look, see if we got with what's going on with the geopolitical tensions. I just want to take a look at some of these defense stocks. They're taking off. You got Lockheed Martin pressing up against the highs of the session. Good day for that. Looks like it was having a good day anyways. Northrop Grumman, that is coming off the bottom too. That's having another good day. I guess you throw Boeing in there. Boeing, not so much of a defense contractor. That's just hanging out near the highs of this, the recent high of the move, just consolidating here. Let's see if there's any other RTX. RTX is Raytheon Technologies. There we go. So going into the weekend, there's your defense stocks being a little bit nervous. And let's see here. Marky says, what about General Dynamics? General Dynamics coming up off the bottom here. That's up $4. I keep an eye on 235. Maybe if you're playing this into the close of the session, I see three highs really over the last 3 weeks coming at that 235 area. So that will be the area that we will be wanting to keep an eye on. But big day for defense. The other thing is Jay is pointing out here. These also kind of fall into the value names. And this has been a little bit of a move into value. LHX coming in there too. That's up $5. That had a gap up a couple weeks ago. And if we could get over 213.70 or 217.30, that would be the recent high. That was on February 1st. Looks like you got some room on the upside. Currently trading 215.30. So just going, we did have a move out of some of the growth stocks here. And you have to be wondering at this point, Whether that rally, that just very momentous rally in January, might be losing a little bit of steam for these growth stocks. Tesla pulling back today, filling the gap. Spent a couple days over 200, but now back under 200. So potential turn there. Kathy is trading down $1.53. That hit 44 last week, so that's peeling back. Some of your other growth stocks, I saw Peloton trading deep in the red. But let's get away from some of the growth and some of the value and absolute disaster of the day, disaster of the week. Lift, well, it got a little lift off the open, and then there's just nothing but sellers. It looks like you just have some big institutions just throwing in the towel on this one. Did have that some support in the pre-market at the 1075 area. You can see once that gave away, it's been pretty much all downhill. Dragging down Uber with it too, but Uber had the good report, but still not getting much love today. Uber now distancing itself off $1.69. Anything in there? Nope, a gap down. We talked about people perhaps trying to buy the dip on this one today, and just don't see a really identifiable area or lower risk area. Could get a gap fill here at 31.85, but that's a ways away. What else here? AYX, I'm not sure if that is a defense stock or not. That was having a fantastic day, but it looks like you have a reversal in this one, trading off the lows of the session. So it did have a good start, found resistance, and now we're pulling back. Let's see if you get a gap fill on this one. Got pretty close, 62.67 was your high on Thursday, and your low today, 62.79. So there we go. That's one tech stock that's doing okay today. Saw another one. The chips are weak. The chips are down today. NVIDIA, after having just quite a run, getting close to 230, gotten over 230.20. This is giving back some of those gains. NVIDIA traders, I just alert you guys, you're coming up to a pretty important area as we speak. Well, you already did hit that area. You had two lows, just under 208. We came back down to that area today, dipped under it, or didn't get under 208, got to 208.11, and now rebounding. So now we can call that three lows in the same area. So if you're stepping out here, that's the area you want to lean on. If that 207 is taken out, 196.11 is your next daily low. That's $11 away. S&P's inching up here towards the highs of the session. That's 0150. So market seems to be shrugging off whatever problems we had this morning and making our way back. Let me see if I can see Mr. Udall here in the background. I'm going to admit Mr. Sean Udall. He's the CIO of Quantum Trading Strategies. He will be with us here in a minute. We will get his take. You can see the name Sean starting to appear here. We'll see Mr. Udall joining us from Arizona. Me and him have a little bit of different opinions on the markets. And once he comes on here in a minute, we will discuss those differing opinions. And let me see here. It looks like he's coming in. You're here, Sean. You're live on the closing print. You're looking clean cut there, ready to go. Are you ready? Are you ready to exude the Sean Udall bullishness?
Yeah, if it's at the right time, and it's been the right time since last time you and I talked. So I even think, I can't remember the last time I was on with you and Dennis. It was probably a few weeks before the December lows. But I mean, we got to a point where, if you ask me, the late last year lows, to me, they weren't really damaging or new lows. I really think the true bottom of this market, like 2008, wasn't the true bottom, but it was the true bottom for most stocks. You know, the official bottom was March of next year, or of 09. So I kind of think it's the same thing. I think kind of The panic lows were probably May, June. So then the lows in late last year were, again, this is what I think, more of a retest. So I don't know. I mean, I think the case is getting weaker for the bears. It's still a weird year because the Fed, I think I came in this year thinking opposite of everything, especially Mike Wilson, who I agreed with for a good part of last year. But I basically thought, if you're going to make money this year, you're going to have to make it in the first half. I think the second half of the year is going to be tough. But I think you and I were just recently talking. I think we both agree it could be a little dicey short term. So you know what's going to happen? It's going to depend a lot on the CPI. If the CPI is cool, so everybody the good news is everybody thinks the CPI, or everybody's been selling since the jobs report because they're thinking, well, the CPI is going to be high. Jobs and CPI don't really have anything to do with each other. So anyway, we'll see what happens. I think a CPI number that's surprisingly cool, and we're going to rip your head off the top of this rally again. I think you need probably a worse than expected CPI. Like if it's just kind of a little bit bad, I don't think that'll cause a big sell-off.
Okay. So one stock that we'll go to some individual issues here, and I will share my charts. One stock that you were pounding the table with, I had you and Gene Munster on a special show last year when the stock was coming down, was Meta. And you got the pop on here after earnings, and now you're faded back into the gap. I mean, was this just a little bit too much? Are you gonna sit out this gap fill? Did you pare back your position? I mean, how often?
It probably was too much at 194, but if you have to ask me, even at 194, if I had to make a call, ultimately higher or lower from 194, I'm going to say a lot higher. So I think, the stock was pretty reasonable at 150. I didn't buy any until the last earnings report before the most recent one, when they had the huge gap down. And then I just look, 95 and unders have seen, around the time I was buying it, I think this is going to set up pretty well or pretty similar. By the way, I got a couple more I kind of think might be the same thing, right? We're pretty close to now. But anyway, I think I don't know if Facebook or the next stocks from, people forget how long some of the stocks from 2000 took to get to highs, and some of them never have gotten to highs. So I think we will see that again. But Meta is a stock that I firmly believe, if held long enough, will go to all-time highs again and higher all-time highs and stuff like that. And if you remember, the last thing I'll say on it, I like the metaverse investment. The whole negative thing on the stock is everybody's criticizing them for spending too much money. I think the worst thing Facebook could do is not spend enough money to keep innovating and keep growing. And
quick question here from Toronto Dave. I know the answer, sure, but I'll let you answer it. How long are your trades usually?
There's no, especially now, they can be hours, and I can hold stuff for years. So it depends on the evolution of the market. If the Fed got back to a more rational sort of 2.5 to 3% on Fed funds, which I think they'll eventually have to kind of go there. But if they were to do it at a decent pace and not stay too high for too long, they're not going to stay higher for longer. They're going to stay too high for too long. But if you think we're in a world where we're going to go back to 2.5% Fed funds, there you go. It's I
don't think you see that. All right. So what? Yeah. Are there some growth stocks that you're looking at that really haven't taken off yet?
Yeah, exactly. I think the easiest trade for long investors and long traders right now is kind of finding good things like a PayPal that haven't moved. Now, they haven't had as good a results as some of the other companies that have made big moves off lows, but some of the companies that made big moves off lows haven't even said anything yet. They haven't had any earnings reports, and they haven't done this. And I'm not even talking about the speculative stuff. I don't think Tesla said a whole lot to double. NVIDIA hasn't said anything to double off lows. And I think there's a lot of stuff far more deserving for bigger moves. But so I think a PayPal now it's not quite as juicy as Meta was at lows. And by the way, if you remember, I was talking about Netflix last summer. But a PayPal now, I would set it up as sometimes boring and unsexy out returns a lot of other stuff. It's not going to be the best because it's never going to get that hype glow. But I think it would be good if PayPal doesn't get hyped again. Like if it just kind of starts moving in accordance with, hey, the compound annual growth rate of the stock since its IPO, you can make a case it should be a lot higher right now. So I don't know if we were talking back then, but PayPal post IPO was basically a $40 stock. It was a little, if you bought it perfectly, you might have got, a little bit below that. I don't know. Can you see the long term? Yeah, you can kind of see it there. Yeah. So it was basically a $40 stock, give or take 7 points for about a year and a half. And I loved it back then. Well, think about, dude, how much bigger of a company it is today. Like we're talking magnitude. This thing hasn't like doubled in size since then. Its magnitude's bigger. And so the stock is arguably a lot cheaper today at 80/40. And I think, so I outlined Shopify the exact same way at about $28. Again, I didn't catch it perfectly, but that's pretty good. And I said, look, Shopify literally has, their revenues have, what do you say when something's tenfolded? So quintupled's 5x. Desa X, I don't even know that.
I don't even know what
anyway,
it is.
it's a 10 bagger. Their revenues are more than a 10 bagger. I think in like 5 years, and now it might be 6 years or something like that. So the revenues are 10x, and the stock, is maybe 2x. So there's a lot of things like this. God, it just one was on the top of my head. I like Datadog again, just because people here have heard me talk about Datadog, and there's some Datadog fans I know. I do like Datadog again. Datadog is not cheap. PayPal's dirt cheap. Meta was dirt cheap. Netflix at summer lows was pretty dirt cheap. But Datadog is cheap for its growth. And, everybody's all hyped up on AI. Datadog is probably one of the best AI companies. But, they weren't under $20 a share. They weren't $10 a share. So they're not going to get an AI stock pump, basically.
What about some of the guidance from some of this mega cap tech? I mean, they basically came out and didn't give you great news, anything to be super excited about.
Well, but Joel, we basically priced most stocks for a financial crisis, though. So you have to you have to think of things like, what's the news relative to what stocks are now? Was Tesla priced for a financial crisis? Even at lows, probably not. But 85% of the stocks that are down 75% off highs, and we're trading at 8 times sales, and now are trading at 2 times sales. They're priced for a financial crisis. I mean, there's 40, 50, 60% growers at 2 times sales. We haven't seen that since 2008. Maybe there was a little bit of that left over at the 2011 lows, but we haven't seen it. In 2016, a lot of valuations were really low, and look how much stocks moved up from 2016. In 2016, we bottomed at double the valuation of tech broadly is right now. And I'm talking all cap tech, not mega cap tech. Because, Apple's not that cheap. Google's not. By the way, I started trading Google again this week. I don't think it's super sexy, but same thing. I think they've lived on AI. They've dominated AI. To think that Microsoft is going to be able to do anything meaningfully to dismantle the preeminence that Google has is literally laughable. It's a laughable conversation if you know the facts of the industry. So if anything, I actually think Google's going to get stronger in AI, and they're going to get stronger in search. And, Microsoft is going to keep spending quite a bit of money on search and probably not get a whole lot out of it.
Yeah, I mean, they sold that Microsoft on those pops. It's
but by the way, Joel, let me ask you a question. Let's say Google tons it in AI and starts making an extra $20 billion a year. Do you think it's going to make the stock go up much from here? So they'd have to make an extra 80 billion, 100 billion a year in revenues to make it be a big deal, like to the stock. I mean, that's an really overvalued stock. Like everybody says it's cheap. It's not. It's relative to its Microsoft. It's very expensive relative to itself and its core growth and stuff like this. And in a world where Microsoft can't buy much of anything, It's even more expensive. So because they're the power of Microsoft is they can do M&As and do accretive deals and just grow massively through cash flow, reinvesting cash flow in M&A. And in a world where they can't really do that, then you got a question: should the stock be up here? So I think we're going to see that. We're going to see stocks like Microsoft probably be dull for lower for longer, or the same price for longer. And there's a lot of really beaten up stocks that are still really crazily cheap.
Give us a couple before we let you slide here. We're coming up on the open. S&P's bill buying balance took us up to 4103. Just made a new high of the session here, but just right here trying to get that close over that 4100 level. Give us one or two stocks. There's a couple of these growth stocks.
Well, yeah, let's research.
Focus on.
I think
that had the big run, and now you're pulling back. The hardest thing
they're
for
pulling
these.
back. Yeah, I don't know. A lot of these I don't like a ton. Although I could make. Band made an arguably crazy run, so that's BAND. But Band also had no business being a $10 stock. I think I talk about software, and the software is cheap at 2x sales. I think Band was like 0.4x sales at the lows. So it's they're profitable and cash flow positive. So something like a Twilio is still really interesting to me. But that you're looking for stuff that ran up hard. And I think this is a decent pullback on this stock. It's not a great, but look at Square. So Square just 3 days ago was probably, how many
90
points higher?
Yeah,
there you go.
How about this is one that Bill has been trading since you brought it up. RELY. That has stock hit $9. Got the pullback. Got up to 1350. Pulling back. Let's call it 9 to 30. You think you're going to get a shot here at like the 50% retracement area here, maybe 11?
I don't know. To me, this actually is pretty dull. This is one of those. So there's a bunch of companies like this that really do have bad results. They've been fine. They're literally trading at like 1/3 of the price they would be trading at in not a hot market, but just sort of a more normal good market. And they keep producing results. I think this is just a dull stock. If you ask me, though, I think it's more likely to break out to the upside than the downside. So because their business has kind of been curtailed too. They're in the money transfer space, kind of the more innovative version of like Western Union and things like that. We'll see what happens. But Europe has been pretty bad. Look at the war in Ukraine and all this stuff. So they might go up just on both two things. They could go up on both revaluation higher, which will probably be the main thing. But the other thing that could just be their business just grows a little faster. But
Sean, got a quick question here, and then I'm going to let you hop. I know you might want to get some MOCs in there. RJ45 wants to know what's your favorite forms of technical analysis, and what do you like to do for your fundamentals? You kind of have your own portion. Potion.
Well,
what's your favorite technical analysis technique?
Well, I do a factor model basically, but if I were to put it in a certain chart indicators I like to use, and it's funny, these been around forever, but I don't even know but the good old RSI and MACD are great. I use some newer variations of that now, but and then some people call it, I call it the ADX, but it's actually the ADX DI. So DMI indicator on certain systems. But you basically have an ADX, you got a DI plus and a DI minus. I think that's one of the most powerful tools you can use. And again, there's certain ways to use it. But yeah, so those are some of the technicals I like. And then I like EMAs over MAs. And I could care less about a 50 and 200 day personally.
Right. Well, the golden cross. All right. We've been on the line with Sean Udall. He's the tech stock strategist, joins us here on the closing print to give his take on the markets. One more before I let you go. DraftKings.
Sure.
DraftKings.
Well, we'll see. They'll report. It's again, there's a lot of stocks like this that you could make a case probably could have gone up more, because there's some pretty dire companies that went up crazy amounts. But I think we'll just see. I think they've more than proven that the growth, again, I'm not sure they missed a quarter last year. If they missed one, they beat on all the quarter. They might have had one quarter where they guided a little bit skinny, but they might have beaten all the guides too. Like I think it's just a dislocated stock. But the problem is a stock like this won't get completely out of the woods until we have the end of the Fed fear, because the problem is the funding window is closed. So anything that if there's a perception that they might need funding, the funding window is closed, and it's probably going to stay closed until we know for sure the Fed is done hiking. And then once the Fed's done hiking, you get the funding window open. I think you get a much bigger risk on trade. Now that could be the interesting part of the second half, but that's a longer discussion. But no,
yeah, okay.
DraftKings has delivered quarter after quarter after quarter, kind of like SoFi. By the way, SoFi finally got a little bit of credit this quarter, but not a lot. I mean, there's still hundreds of beaten up stocks that their prices are completely dislocated. So, and I'm going to
let you go
rectified
here, Sean. Yeah. We got about a minute and a half before the close.
Right,
I don't know if you want to get any orders in there. I'm going to let you go. We're going to get you back in here next Friday, hopefully. Thanks. Have a good weekend.
You too.
No disaster here today, folks. It looks like we're going to close here right around 4,100. We did sneak up and made a new high on the buying balances at 41.04 and a quarter. Looks like we're going to get that close over 4,100. So not a great week in the market. We closed last Friday, as I mentioned. I believe it was like 45.5. So let's see. We're building the base. Didn't take out our pre-market low today, 40.60.75. So that's going to be turned out it's going to turn out to be the low for the week. The only, I think the disappointment here today, perhaps, is for those that were looking for a little bounce here in Google. You did get a little bounce early in the session, but failed again. Didn't make a new low for the move lower on the session, but Google did make a higher low. And I believe we did get a gap fill here. 94.40 was the gap fill. People are reevaluating that today. 94.53 low. So mild range on the session. Was looking for like a 70-point range. Looks like our closing print's going to be right there at 4,100, or maybe just a couple ticks below. Everyone, have a great weekend. We didn't talk any Super Bowl. Doesn't seem like anyone's super interested in it, but we'll see what goes. Looks like you got a few after hours sellers here. Nothing major, but once again, thanks for joining me here on the closing print, and we'll be back with you. Maybe got a surprise or two for you guys on Monday's show. Thanks for joining me. Have a great weekend.